Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing, make sure you reach out to a qualified financial advisor. But with that said, let's get into another episode of the Young Investors Podcast.
All right, everyone, welcome back. Hamish Hodder. I don't know if you can see, I've nicked my nose. I've got a little gap in the top of my microphone pop filter, and it's quite sharp. I just nicked my nose, and now my eyes are watering so much. Just before, got myself. I need to find this piece. It must have broken in my bag on the way back from the States. But anyway, how are you doing, mate?
I thought I broke that when we were doing when we did that photo shoot for the US. You know when I dropped your microphone off the table.
Did you?
I think that's when it broke, right? Or no?
Oh, maybe. I don't know. Maybe I need to find like a little piece to fill in the middle of this pop filter because it gets my nose because I want to keep it close to my face. But anyway, How are you going, mate?
I'm doing good. Yeah, I'm going well. I saw Oppenheimer on the weekend. It was very good. I was very impressed.
Yeah?
Go and see it, everyone.
How'd you go with the length?
It actually felt really fast.
Did it?
Yeah, it was. The story actually moved quite quickly, and it was kind of the story is, I mean, as you might expect, it's of his entire life, Oppenheimer's life. It's not just about the atomic bomb building.
Oh, okay.
So there was actually quite a lot of stuff that they included in the movie, and it didn't feel long at all.
Right.
Yeah, it was good. I'm a sucker for movies with really good soundtracks that just like get you really in the. Because like the whole movie is super tense, and it's trying to drive that emotion of the impact that they're having of building this bomb before and after and everything. And it's the soundtrack is incredible.
Nice.
Yeah, it was good.
Fantastic. Oh yeah, I'll have to see it. I'm tossing up obviously like the rest of the world between that and the Barbie movie. So
yeah, well,
I don't know which one I'll see first.
Yeah, well, Barbie, I think it's the biggest box office weekend of the year so far.
Is it actually?
Yeah, it was I was trying to remember some stats. I think it was like I think they've already done 250 million. They've already done close to 500 million in the global box office.
Wow,
which is insane. I mean, that's massive. I think it's the highest grossing film directed by a woman ever in history.
Wow.
So yeah, it's crushing it.
Nice.
Yeah. So
very cool.
So it's been.
Have you seen it?
I haven't seen it. I haven't. I don't think it's my cup of tea.
We'll have to go.
So
I'll fly to Melbourne. We can go watch it together.
Okay, great. Yeah. I think I'm sick that weekend. No, I'm kidding.
Oh dear. Anyway, well, I'm glad. I think I'm going to go see Oppenheimer this weekend. Be interested. Drop your movie reviews in the comments, guys. What did you think of it? Have you seen it? What's better, Barbie or Oppenheimer? Okay, what are we talking about today, Hamish? That's right. We are talking more earnings. So we've got Google, we've got Meta. So we'll talk about the advertising giants today. We've also got some central bank stuff. We've got some interest rate decisions from the Fed. Actually quite interesting because there was a bit of umming and ahhing as to what they were going to do this time around. So we'll talk about that. And of course, Elon Musk, the crazy guy, he has completely rebranded Twitter. So we'll talk about that as well.
He just can't stay out of the news.
He can't, man. He can't.
He loves it. He loves the limelight.
Yeah, exactly. Why else would you buy Twitter? Now he makes his own news.
Yeah. But with that said, today's episode is sponsored by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics, access up to 10 years of financial data and company filings, and manage your portfolio by tracking your investment with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha for free for 14 days. That's seekingalpha.me/young investors. And as always, thanks to those who use our links when signing up to these platforms and are supporting what we do here.
It is very much appreciated. That's how we keep the podcast rolling.
Keep
That's
the lights on.
Yeah, I mean, pretty much. It's all.
Yeah.
It comes down to sponsorship at the end, because we don't really. We don't really. We've said this in the past. We don't really push for monetization of the podcast very much.
No.
We do it more as a passion project. We enjoy doing it. Keeps us up to date with all that's going on in the news. But there are still costs involved in producing it. So yeah, that's pretty much all the revenue that we make through these sponsorships just goes into keeping the podcast running. So thank you. Yeah, thank you to everybody that uses our links to sign up for stuff like that. It does help out a lot.
Yeah.
All right, Hamish, where are we starting? You want to do central bank news, or do you want to do some earnings first up?
Let's start with central bank news. I want to hear, because I saw the headlines for what happened over in the US, and I was a little surprised by some of the headlines that I saw, but I haven't looked in any of the details yet, so I'm curious to hear.
Yeah, so the FOMC had their meeting, so the Fed held their meeting. There was a lot of speculation around this meeting in particular as to whether they were going to hike interest rates, especially with the headline inflation rate cooling so rapidly, at least for the moment. Because there was also a little bit of umming and ahhing, because I think the headline rate was down to 3%. So they aim for 2%. So it's actually not that far away, considering what we're at 9 a year ago.
Yeah.
So it's come down a lot. We still had that core inflation, which excludes food and energy, which was 4.8, I do believe.
Yep.
So that one was still it's a bit high. So there were people kind of arguing in the comments, as they do, as to whether they were going to leave rates as they are, or whether they were going to hike them. The market was anticipating that they were going to do a 0.25% interest rate hike. That was what was priced in. And they did indeed do another rate hike of 0.25%, which brings the target range now to 5.25 to 5.5%.
Yeah.
So they did it.
Yeah, they did. I didn't know that the market was kind of pricing that in, but the market can do whatever it wants. But I was genuinely surprised that they continued to hike. I mean, there's so much public pressure, I think, to not hike in Australia and in the US at the moment. And the fact that inflation is coming down and they continue to hike is just surprising. Whether or not that's the correct move, I hopefully I trust Jerome Powell's probably got all the data available to him. But I'm actually surprised that given public pressure, political pressure, and the fact that inflation numbers are coming down quite reasonably fast if you're looking at top line numbers, and then you can look at the core. But yeah, it's Jerome's definitely been able to act independently from public opinion, let's say, which is exactly what you want. So
yeah, it's interesting. I was watching just some other content creators' opinions on whether interest rates are going to be hiked, and so many people being like, it is I tell you one thing they won't do. There is no way they're going to hike interest rates, especially considering inflation is basically gone. Inflation is gone now. I was like, this is really gonna bite you. It just shows you. Just don't listen to people that are making macro predictions. Just don't do it. What happens. That's the way to approach it. It's like a book, and you're just turning over the next page, and whatever's on the page, you just have to read it.
Pretty much.
Okay, what else? CNBC said, in a move that financial markets had completely priced in, the central bank's Federal Open Market Committee raised its funds rate by a 0.25 percentage point, to the target range of 5.25 to 5.5%. The midpoint of that target range would be the highest level for the benchmark rate since early 2001.
Wow.
The hike received unanimous approval from voting committee members. During a news conference, Chairman Jerome Powell said inflation has moderated somewhat since the middle of last year, but hitting the Fed's 2% target, quote, has a long way to go. Still, he seemed to leave room to potentially hold rates steady at the Fed's next meeting in September. Quote, I would say it's certainly possible that we'll raise funds again at the September meeting if the data warranted, said Powell. Quote, I would also say it's possible that we would choose to hold steady, and we're going to be making careful assessments, as I said, meeting by meeting. Along with the rate hike, the committee indicated it will continue to cut the bond holdings on its balance sheet, which peaked at $9 trillion before the Fed began its quantitative tightening efforts. The balance sheet is now at $8.32 trillion, as the Fed has allowed up to $95 billion a month in maturing bond proceeds to roll off. There you go.
Yeah, that's the other aspect that people, I think, need to be aware of is beyond just the raising of the official federal funds rate, the Fed is also likely to continue accelerating the sale of bonds, which is adding more supply of bonds into the market, which raises the interest rate of US Treasuries. So that's another element is they can stop raising the federal funds rate, but you could continue to see like the 2-year Treasury bond rate or the 10-year Treasury bond rate continue to rise just because it's been flooded with supply. And there's no kind of demand on the other side to meet that, especially if the US government is continuing to supply the market with a lot of bonds because they need to continue to issue more debt. So that's kind of the other aspect that'll take a little bit longer to play out. But it's an important component when we're talking about interest rate hikes. Yes, we're just talking about the official federal funds rate, but in the market of interest rates, what the Fed does with their balance sheet is also really, really important.
Yeah. Yep, that's right. They can sell them or they can simply let old bonds that they hold reach maturity and then decide to delete that money instead of taking it and reinvesting it in more government bonds, which is what they typically do. But they can stop doing that, and they have been. That's pretty much all I had to say. The main point I wanted to make was that when it comes to macroeconomics, you don't know what's going to happen, so don't try and predict it. Just go with the flow and stick to individual businesses because, as you can tell, who knows what was going to happen. This rate hike could have been 0.25%. They could have left it. Who knows?
Yeah, and the same can be said for the data we got out of out of Australia. We got inflation data for the second quarter of 2023. So unlike the US, we do now do monthly inflation data, but the main the main output of data is this kind of big lump that comes every quarter. And we got the second quarter data for that. CPI rose just 0.8% during the second quarter. On a year-on-year basis, it was 6%. So the annual rate is still quite high, but the quarterly rate is very low. I mean, if you kind of extrapolate that last 3 months, the 0.8%, you extrapolate that for a year, you'd be at 3.2%, which is pretty low in inflation. But again, you've kind of got this situation of headline inflation and core inflation telling a different story, and it's very similar now to the US. It's the same story we've had for a while, which is fuel is kind of pulling down the headline number while core inflation is a little bit stickier. Economists were expecting anywhere from 0.9% to 1.1%. So it actually came in lower than kind of all of the major expectations.
Okay.
In terms of, which means absolutely nothing. Thanks, economists. The biggest contributors were rent, which was up 2.5% during the quarter, which is a pretty massive increase in rental costs, and kind of reflects landlords now kind of pushing through rent increases from the interest increases that they've already seen on those properties kind of earlier in the year. Travel and accommodation was plus 6.2% during the quarter, which is massive. Financial services was plus 2.5%, and new dwellings was plus 1%. Was this a quote out of the ABS? Was high demand for international travel, particularly to Europe. With the start of the European travel peak season led to price increases. These were partially offset by price falls for travel to Southeast Asia and New Zealand as prices dipped following increases during the Christmas and school holiday period in December and January. So basically, all those people I'm seeing on my Instagram in Europe, it's your fault. I blame you for inflation.
It's so true.
I knew there was a reason I hated seeing all these pictures of the Eiffel Tower, and it's because you're causing inflation.
Making my life harder, God damn it. That's so funny. It's so true, though. Australians at about this time, we're off. See you guys.
Yeah. What inflation?
See you in a month. Yeah, exactly. Well, everybody, enjoy your Europe trips. I hope they're great.
Yeah, I hope
Where
so.
would you go in Europe if you had a Europe trip?
I don't know. I haven't really been anywhere in Europe. I've only been to I went to London and I went to Ireland.
Nice.
I think that's all I've been in like the UK or Europe. So I haven't been to France or Italy or Croatia. There's a bunch of places that I would love to see. We'll have to maybe we need a Berkshire event, but in Europe. We need to find something of a similar reason for us to go.
I'll get Guy on the phone. He's over in Zurich.
Yeah.
He's in Switzerland. So
that would be great.
I'll hit him up.
Yeah.
Well, I tell you what, maybe we could sneak into his Value X conference. Tax deductible.
Yep.
Trip to Switzerland. That'd be nice.
Yeah, that would be
well,
good.
I mean, my family history is from the Netherlands with my last name, but I've never been. I've never been there. I'd quite like to go though, so maybe we'll have to plan something.
Yeah,
plan something.
We'll find some reason to go over there.
We need Matt Peterson to get back to us. We want to go to Turkey.
Yeah, that would be great as well. Yeah,
that would be cool.
That would be pretty cool.
Yeah. Anyway, is that all we had to talk about for the Australian?
Yeah, that's it. It seems like Australia, related to the Fed stuff we just spoke about, it seems like Australia is going to take more of the approach of pausing on the rate hikes now that inflation is kind of coming down. So I guess potentially we'll get to see a bit of a contrast between two strategies, which have been pretty much the same up until this point. Both the US and Australia have been just hiking rates to get inflation under control. And now we're maybe seeing the US be a bit more stern on rate hikes, continuing to push them. Whereas Australia seems like they're going to maybe potentially pause. Some hope. Well, I don't really know, but maybe we'll see a bit of a distinction between the two strategies and which one is ends up working, because we don't really know. I mean, potentially, you pause and inflation skyrockets again, or potentially pausing is the right move, and if you continue to hike, you're going to just push the country into a recession. No one really knows. So it's it's a difficult line to walk. Yeah,
for sure. Alrighty, Hamish, what would you like to talk about next?
Let's do some earnings. So we've got the two big advertising giants who fortunately report 1 day apart from each other, so we can kind of lump them together every quarter and talk about them together. So we'll go through what we normally do. We'll take one each. I think you've got Google. You take us through Google first, and then we'll compare and contrast to Meta platforms.
Okay. All right, Google. So yes, they reported their second quarter earnings. The shares rose about 7% off the back of their earnings after the company reported better than expected revenue and profit driven by growth in its cloud computing unit, which we'll get to in a little bit. For the fourth straight quarter, Google's parent company reported growth in the single digits as it reckons with a pullback in digital ad spending that reflects concerns about the economy. Analysts don't expect growth to hit double digits again until the fourth quarter. So I just chucked that one in because I didn't realize that they've actually, for the fourth straight quarter, they've only seen single digit growth. I mean, Google was years ago was so used to, what's growth this quarter? What, 20, 30% year over year?
I mean, especially through 2020, through the pandemic, and all businesses all of a sudden had to figure out how to do online advertising. And I just remember some of the numbers that these businesses were pulling during the COVID lockdowns was just insane. So it is a stark difference to see them have quite a reasonable slowdown for the first time in a long time. Yeah.
So for Google, revenue rose 7% year over year to $71.6 billion for the quarter, a 9% increase on constant currency basis. As I said, fourth straight quarter of single-digit revenue growth. In terms of operating income, rose from $19.5 billion to $21.8 billion. Representing a 29% operating margin versus a 28% operating margin a year ago. So their operating margin has held steady with the stats that they're showing. Net income grew from 16 billion to 18.4 billion. So of that 74.6 billion of total revenue, they're keeping 18.4 billion of it as net income. But of course, when we look at Google, we like to break down their individual revenue segments because there are a few different parts to their business, and watching how each segment's revenue contrasts with its operating income can give us a good indication of what's really working for Google, or Alphabet, I should say, versus what's not working as well. So of course, the biggest revenue segment, search, so that grew 4.7% year over year for the quarter. YouTube ad revenue grew 4.4%. Google Network fell 5%. Then Google Other grew 24%, but smaller revenue segments, 6.5 billion to 8.1 billion. And then we also saw Google Cloud grew 28%, and that's what all the headlines were about. Google Cloud grew 28% from 6.3 billion to 8 billion. So again, It's still a smaller revenue segment, but it's obviously one that analysts are predicting will be a large, thing for Google in the future. But then we take that and we look at how that then converts into operating income to see whether the individual business segments are profitable. And of course, Google Services, which is Search, YouTube, Google Network, and Other, grew from 21.6 billion of operating income to 23.5 billion year over year. So it's up 8.5%. So modest growth in the operating income of the Google core business. But importantly, Google Cloud went from a $590 million loss to a $395 million gain year over year. So Cloud was, I believe, profitable last quarter, but it's good to see again that this segment, it does look like it's now, even though it's very small, and obviously the business is still carried by Google, it's good to see that the cloud segment is at least turning a small profit. It's not dragging them backwards anymore, which is cool.
Yeah, it's interesting because cloud's such a young business for Google that it's quite hard to assess it based on what it looks like now, because they've obviously a big thing that they've been doing recently is spending an enormous amount of money building their infrastructure and building their staff around that business. So they had costs that were potentially much higher to support future revenue so that they wouldn't handicap their future revenue growth. So it's interesting to see that now, they've kind of seemingly passed that inflection point of profitability where the revenue has is growing faster than their costs.
Yep. Yeah, exactly right. So that was really what all the fuss was about for this quarter. I mean, it was really their core business just saw quite modest results, and then the smaller part of their business, this Google Cloud, grew at a handsome clip, and everyone was excited about that. Now, I do want to, because we're talking about the advertising giants, we should talk about their cost per click, how many impressions they're getting, that sort of metrics as well, those sort of metrics as well. So for Google, and I believe you've got this data as well, we'll talk about this for Meta as well in a little bit. So for Google, paid clicks rose 8% for the quarter, and they noted that was from an increase in search queries resulting from growth in user adoption and usage on mobile devices, growth in advertiser spending, and ongoing product and policy changes. So interesting, paid clicks rose 8% for the quarter. However, the cost per click fell 3%, which they say is driven by a number of interrelated factors, including changes in device mix, geographic mix, advertiser spending, ongoing product and policy changes, and property mix. Hamish, what do you take out of that?
How many factors could you list so you could hide what the actual cause was? I mean, it's good that they give so much clarity on like the different factors that go into these numbers, because they are very complex, but it is really hard just on those just on that description to know which is contributing more.
Exactly.
Because some of those things are good things for the business and relatively normal business cycle things like growth in advertiser spend and that sort of thing. And then others are maybe more, I don't know, maybe more of a concern. And we don't know what percentage any of these are contributing to these numbers. So I don't know.
Yep. The question that we'd like to have answered thoroughly is, what's the impact of advertiser spending? Is advertiser spending, or what is advertiser spending? Is it up? Is it down? Because that drives a large part of Google's business. It's assumed that advertiser spending is obviously down at the moment, but yeah, you're right. They kind of chuck it in there, but they're not really explicitly saying. The one thing I did note is that on their conference call, which I'll get to in a little bit, one of the people that was speaking did say that they have noted in the quarter that there was a stabilized advertiser spend.
Okay.
So stabilized, that gives me reason to believe that previously it was falling and now it seems to have evened out.
Yeah, and that's the funny thing. I don't think they've ever explicitly in previous quarterly results said that they did see a fall in ad spend. Maybe they did. Maybe I'm wrong. But it is interesting to hear them say, yeah, it's stabilized, because that does heavily imply that it was falling. Otherwise, why would you say stabilized? But this quarter, the in terms of their segments, so they saw a decline in Google Network and a rise in YouTube advertising, and that was the same as last quarter. And it seems like the reason for that is because YouTube advertising is largely driven by big brand contracts, which seem to have not dipped as much, whereas the Google Network is a much broader base of smaller businesses running advertising on Google Network properties. So that was at least their description from last quarter. So it seems like the same thing is kind of happening. Like different businesses are choosing to do different things with advertising. The big businesses, the Coca-Colas, the Apples, they're not cutting back, but the main part of the economy is kind of, small, medium businesses is looking to cut advertising as kind of an easy way to cut expenses given the inflation situation.
Yeah, definitely. A little bit more data. So actually, in terms of impressions, they saw no change in impressions, and cost per impression fell 5%, which you would probably expect.
Yeah.
Out of their conference call, I don't take too much out of the Google conference calls. I should say I'm only about halfway through it. I haven't gotten through the whole thing yet. Sundar was just basically saying that they're looking a lot at innovating search. So they're working hard on integrating generative AI in search. They're using it to optimize ads. As well as, what did I write? As well as considering a lot of Google's. They're using it to optimize ads because a lot of Google searches are commercial in nature. That's what I was trying to say, everybody. They just note they're focusing on improving Bard, which is kind of their version of ChatGPT. They're reining in expense growth. They're trying to tighten the belt, as a lot of other companies are. A part of that is reallocating talent to high priority activities. So as when you're flush with cash, you can kind of just, or when times are good, you can do a little bit over here. Everybody can work on everything. We can all work on everything at the same time. Now they're kind of focusing their efforts, focusing on their high priority areas. A lot of that, which is AI, generative AI. Google Cloud seeing continual growth. More than 70% of generative AI unicorns, unicorn being a privately held startup with a value over $1 billion, use Google Cloud. So that's quite a good stat. More than 70% of generative AI unicorns. But you can tell Sundar's just absolutely on the AI hype train on this conference call. They note including Jasper, Typeface, and Cohere. So that's, that was his spiel on AI, machine learning.
Yeah, it's
AI,
the buzzword of 2023.
Bye. Yeah. He also noted a little bit on YouTube. So YouTube Shorts are now watched by over 2 billion logged in users every month. That was up from 1.5 billion a year ago.
Wow.
The other guy also noted, I can't remember his name, sorry, also noted stabilized advertiser spend.
Yep.
The living room remained the fastest growing screen in terms of watch time. And I was thinking about this. I was like, that's interesting. More people, but I was like, if they're just looking at it in terms of watch time, is that because typically watch time would be a lot higher on a home TV? Like, I feel like if I'm watching YouTube on my phone, there's a million other things to do on my phone which could be taking my attention away from the YouTube video. Whereas if I put it on the TV at home, like I'm not getting messenger notifications, I'm not getting emails on my TV, that kind of thing. So I wonder if that's
it does bring an interesting dynamic, because as people do, obviously people still spend most of their time on YouTube on their phone, but as they spend maybe more of their television time on YouTube as well, potentially that means you'll have content that's longer form and short form both working, just in different mediums. Like if you do a video that's longer form, in a distant future where everyone is watching YouTube on TV instead of watching television, you've essentially got, the algorithm feeding those videos to people watching on television, but maybe not feeding them as much on mobile. So it's interesting to see that, but it makes sense. I watch a lot of YouTube on TV.
Me
it's
too.
probably the main. No, it probably doesn't beat my laptop, my computer, but it's definitely
it's up there.
It's definitely up there. It takes a lot of my time now. So yeah.
Right. Yeah, interesting. I think I probably nowadays I watch most YouTube on the TV. Yeah, it would be a close battle between my laptop and the TV. Okay, what else do we have? They're now reaching over 150 million people on connected TV screens in the US. 150 million connected TV screens in the US. That's pretty cool. They also noted there's over 80 million YouTube Music / YouTube Premium subscribers.
Wow.
Which is cool.
That's actually that's an impressive stat.
It's quite a stat, isn't it?
Because my immediate brain kind of connects that to, or compares that to Netflix, which has I think a bit over 200 million. But 80 million is very considerable, and it shows that a lot of people are very much willing to pay for YouTube like it's Netflix, like it's a subscription with no ads basically. So that's really interesting.
Did I tell you my little YouTube Premium hack last time? I think I've told this to you, but for everyone out there that's a sucker for Spotify Premium, you can get YouTube Music, which is exactly the same as Spotify Premium. You can pay for it, and then you also get YouTube Premium for free, and it's the same price.
There you go.
So you can enjoy YouTube with no ads, and you can also get a Spotify Premium equivalent. So there's a little hack for you. Maybe consider it. I actually made the switch. I'm never going back. It's so much better, man. Yeah, maybe that's me because I just watch a lot of YouTube, but I imagine a lot of people listening to this probably watch a lot of YouTube if they know us. So
yeah, I'll have to have a look at YouTube Music. I haven't looked. I'm a sucker for Spotify. I love their user interface. So I think it'd be quite hard to get me to leave Spotify, but they did just raise their prices. So.
There you go. Man, it might be worth having a look.
It's time.
Anyway, what else have I got to say? Not a lot. The only update on the Pixel front, Android 14 incorporates improvements in generative AI. Wow, buzzwords. Ruth Porat becomes President and Chief Investment Officer instead of CFO. This is happening soon, not immediately. And they're looking for another CFO at the moment, but she is still going to stay in the company. And the last thing I have for you, which is just a really interesting stat, which they didn't discuss more. I wish they told us more flavor on this, but they have 15 products that each serve 500 million people and 6 that serve over 2 billion each.
Right. So I guess these are things like Google Maps, for example.
Must be.
Probably.
I'm trying to think.
Yeah, what would be there? What are the 6 that are over 2 billion? So YouTube.
Like, do they like Google search?
Yeah. So Google search, YouTube, like Gmail, probably.
Gmail,
maybe.
yeah.
I'm not sure if that would hit the
2
billion. Gmail would definitely be over
Google
500
Maps.
million. Google Maps is probably one of them. Maybe Google News. Would they count that?
Yeah, I don't know. Do they count Play Store or Android?
Play Store probably. Yeah. True. Android. Yeah, I guess Android. Android would definitely be in there if they're counting that.
Yeah.
I'm trying to think. What other apps? My brain's kind of like Google Drive. Would they have
Google Drive,
2 billion though?
Yeah, I don't know.
Sure.
I honestly don't know. Let's have a look. Where's my phone?
Who knows?
What other Google apps have I got on my homepage that everyone else? Google Calendar, I don't think so. Gmail, I think, yes. Gmail, Google Maps.
Gmail Maps, YouTube, Google Search.
Yeah, I don't know. I don't know what the other ones might be.
Yeah, it's interesting. Why would they not say what? Like, it's.
Yeah, I don't know. I think it was like a comment in passing, just like, "Hey, shareholders, look at this."
Yeah, that seems
By the way, we're the best.
Yeah, it makes sense. No, that is pretty crazy though. Yeah, pretty impressive.
Insane.
I don't.
Anyway, that's Google. Sorry, yeah, you had something to say?
No, that's fine.
Okay,
Yeah.
I was just saying that's Google. Let's move right along into a close competitor to Google, which of course is Meta. Hamish, what is going on over at Meta?
Yeah, so similar story. Some slight differences to what we just spoke about with Google, but revenue for Meta came in at $32 billion for the quarter, up 11%. Year over year. So, and it's actually their first double-digit growth quarter since the fourth quarter of 2021. So again, similar to Google, they've kind of been in this single-digit growth kind of period. But unlike Google, they're actually back at double digits, and they were at 12% on a constant currency basis as well. Within that $32 billion in revenue, advertiser revenue was $31.5 billion. So. Pretty much all of it was actually it was a little bit more than $31.5 billion was advertiser revenue, and Reality Labs, which is their AR VR business, had $276 million in revenue for the quarter. So
it shows you what type of business Meta really is, doesn't it? Yeah. At least for now. Advertising revenue $31.5 billion. Reality Labs, which is their only other major revenue segment, $276 million in revenue.
Yeah, it's gonna take a while, I think, before we see that, if ever, rival the advertising revenue. But so 11% growth in revenue. Costs and expenses came in at $22.6 billion, which was up 10% year over year. So costs grew a little bit slower than revenue, which essentially led to their net income coming in at $7.8 billion, up 16% year over year. So again, it kind of speaks to this kind of operating leverage idea, which is, if you're able to grow revenue at even a smaller percentage faster than costs, then your net income or your profit growth will be very considerable. So their profit growth has been very good. I thought this was funny. Within their $22.6 billion in costs, $1.9 billion, so about 10%, was legal expenses. So there's their legal expense tax of which is
that's funny,
kind of crazy. Almost 10% of revenue, not quite 10%. Went to legal expenses. They're non-reoccurring, Brandon.
Yeah.
Okay.
No, they're not. It's just
just
a one-off.
So I thought that was quite funny. In terms of their users, which is always fun to take a look at, the family of daily active people, which is the daily active users across all of their apps, came in at 3.07 billion, which was up 7% year over year. The monthly active users on their family of apps was 3.88 billion, up 6% year over year, so closing in on the 4 billion mark, which is just crazy. Facebook daily active users came in at 2.06 billion, which was up 5%. And Facebook monthly active users was 3.03 billion, up 3%, which is still kind of crazy that you still have, I think that includes both Facebook and Messenger, so that kind of makes sense. But yeah, 3 billion users still on their Facebook app, which is an app that I think a lot of people might say is kind of dying or is dead or something like that. A lot of people would say that, but yeah, it's still got 3 billion users. So
yep,
it's not quite dead yet.
Yeah, it's very interesting. And that's the thing. I always think I don't really use Facebook that much anymore, but I still probably do check it quite often. A lot of people use it for just marketplace now, which I find interesting.
Yeah.
I think that I don't know, I thought that they were really going to push hard into the video segment, but I find, I don't know if you find this as well, no matter what device I'm using, their inbuilt video player is rubbish.
It's terrible.
Do you find that?
Yeah, it's terrible.
Okay, it's not just me.
Yeah, and they did make a bit of a push because they had the whole they were pushing into streaming to compete against Twitch. They signed a bunch of, this is a few years ago though now, but they signed a bunch of people to stream exclusively on Facebook. On Facebook Gaming was kind of the segment that they called. And then, it just had no success and they wound it back. But yeah, I think, and a big part of that was just the user experience is just woeful. And it is kind of crazy. You would think, from a complete novice, you would think, oh, that doesn't seem like it would be that hard for them to make a good video platform. They got billions of dollars to throw at it. You make it great. But it seems like YouTube is so far ahead in terms of user interface. It's mind-blowing how much... I mean, it's not perfect. There's still a lot of issues with it. But compared to any other platform you go on, Twitch, Facebook, Twitter, any of these platforms, it blows them out of the water.
No, YouTube definitely has by far the most robust video player.
Yeah.
By far.
Yeah, it's not even close. Yeah.
Yeah. Yeah, for sure. But yeah, crazy stats. Going back to what you're talking about, absolutely crazy stats on the active users.
Yeah.
It just blows my mind that they keep adding, that they add anything at all, 7%, 6%, 5%, 3%. It's just, it's quite remarkable, really.
Yeah, it's, I can't remember the exact stats, but they're getting pretty close to the total number of people on the planet with access to the internet in countries where Facebook isn't banned. I mean, what's the global population? A bit over 7 billion, I think. Yeah, and then you've got a billion in China, which are banned. And so you're down to 6. And then there's, I think 30% of the world doesn't have internet or something like that. So, they're very close to just all the people with internet. And then I guess you've got to consider duplicate accounts, bot accounts, which is probably quite a reasonable percentage. I wouldn't be surprised if a meaty like 5 or even more % of some of these users is not actual individual people, maybe even more than that. So we never really know, but yeah, it is crazy that they continue to add.
Crazy.
In terms of ad impressions and price per ad, which is interesting because we do have that. We just listened to that data from Google. What was Google's? Just before we read this out, I think it was impressions were flat. Was it? And then
impressions were flat. And sorry, I'm just trying to go back to that. Yeah, no change in impressions, and their cost per impression fell 5%.
Okay, interesting. So for Facebook or for Meta platforms, ad impressions were up by 34% year over year. So a massive increase in impressions.
Wow.
And the price per ad was down 16%. So you're seeing a very different story compared to Google, which Google is no increase in impressions, but price per ad is going down a little bit. Whereas Meta is huge increase in impressions and the cost of each ad is going down. So what's the difference between these two platforms? They didn't explicitly say this, but I think it's fairly obvious that this reflects a continued shift of engagement towards short form, which Meta is kind of experiencing much more sharply than Google as a picture of their whole business. So people are spending more of their time. People who use Meta's apps are spending more time on Reels. So they're seeing more ads, they're getting more impressions, but those ads are less valuable because they're watching them for less time, there's less real estate, that sort of thing. So
less conversion.
Less effective, that sort of thing. So yeah, it is interesting to see the two situations because, of course, Google is exposed to, I'm sure, some shift towards their short form on YouTube. But as a percentage of their overall business, it doesn't seem to be, as much of an impact as Meta.
Yeah, I guess the only other thing it could be is how they deal, because these ad platforms deal in an auction system, right?
Yep.
So it could simply be, Meta are more comfortable with increasing the number of ads shown, and because it's an auction system, there's more real estate available for the same number, therefore the price is going to fall more. Whereas maybe Google are less comfortable with adopting that strategy. But I think, number one, you're right, is the shift to short form.
Yeah, for sure. And I think as Google kind of listed in some of their numbers, there's so many factors. I mean, we're talking about, maybe we're speculating on some of the main drivers, maybe, but there was policy changes, advertiser spend. There's maybe 20 or 30 factors that probably go into these figures. Yep. So of course you can't pin down exactly what's causing it. Zuckerberg's statement on the earnings was, "We had a good quarter." He said,
Nice.
We continue to see strong engagement across our apps, and we have the most exciting roadmap I've seen in a while, with Llama 2, Threads, Reels, new AI products in the pipeline, and the launch of Quest 3 this fall. So Zuckerberg's happy. I'll talk about Threads when we talk about Twitter.
Okay.
In the Twitter story.
Okay.
Because there's definitely some interesting developments on that front. And then and the last bit of earnings was just on Reality Labs. So it was 280 something. What was it
276 million in revenue.
But they had a $3.7 billion loss in the quarter. So spend $4 billion, generate $300 million in revenue kind of situation. And 3.7 billion is enormous, because I think the previous projections were they were going to spend about 10 billion a year. So at 3.7 billion in a quarter, that's running way above 10 billion a year. So it'd be interesting to see how they're at the end of the financial year, where that sits, because at the moment they're tracking to be in the 15 billion just on Reality Labs ballpark, which is
insane.
Astronomical. In terms of what was the company's statement was unit losses will continue to increase meaningfully year over year due to our ongoing product development efforts in augmented reality, virtual reality, and investments to further scale our ecosystem. So
nice.
Yeah.
There you go. It's a lot of dough being spent.
Yeah. Yep. It's pretty mind blowing. I took a quick peek at their income, because I had imagined that their income their profits have probably come down considerably from previous quarters, given the Reality Lab spending. And some of their biggest quarters back in 2021 were around 10 and 11 billion, and they did 8 billion this quarter in net income. So not actually that much. Well, it kind of shows their core advertising business has actually continued to grow reasonably. But of course, they're spending about 15 billion a year on VR.
Out it goes.
So
Out it goes. Light it on fire, boys.
Yep.
All right. Very interesting. All right. That's pretty much, they are the two advertising giants. Very interesting.
Yep.
Oh my gosh, we got to talk about Twitter, don't we? We got to talk about Elon. What's he doing?
Oh, Musk. He just
Hamish.
needs to just stop for a moment. Like he needs breaks from press, because I think he just as I said in the beginning, he just loves to be in the media. So
he needs to go on a holiday without his phone.
Yeah. Yep. Exactly. Someone needs to
oh dear.
Yeah, he needs to go into like the forest in like a wood cabin, and someone just like ties him to the thing. No more press. No more changing anything.
Yeah.
Nice.
Elon, wait here for a few weeks.
Yeah.
But
all right,
talk us through, Hamish.
Yeah, so Twitter has officially changed the company's famous bird logo to an X on Monday as a part of a sweeping rebrand that he announced on the social media site over the weekend. The domain x.com is also now redirecting to Twitter. And the transition from Twitter to X reflects Musk's vision to turn the platform into what has been called the Everything app. So this kind of reflects a larger change that Musk is kind of going through with the platform. And if x.com sounds familiar, it's actually the original name for PayPal. So it was kind of what the PayPal was previously called before Musk actually changed it to PayPal. And then recently he rebought the domain from PayPal.
Interesting.
To build his Everything app. So Twitter CEO Linda Lacarino wrote in a post on Sunday that X will be centered in audio, video messaging, and payments and banking. She added that the platform will also be powered by artificial intelligence. So,
machine learning.
Generative AI. Generative
AI.
Wonder what the buzzword of 2024 is going to be. Do you reckon it's still?
Oh gosh,
do you reckon it's still AI, or do you reckon it's moved into something?
Yeah, I don't know. Probably quite a bit in AI.
Yeah, I guess AI is going to be
the
buzzword for the next couple of years, probably.
Probably. Yeah, I don't know if there's going to be another buzzword. It's gone from Bitcoin to meme stocks to AI.
Yeah.
What will be next?
I don't know.
Who knows?
I wonder if we'll see potentially we'll see a bit of a bubble with a lot of younger AI companies, potentially somewhat of an internet bubble, because it does seem to have that similar level of hype. And I would imagine that maybe not yet, but over the next couple of years, we'll see the birth of a lot of AI companies and trying to get capital on markets. So maybe we'll see a bit of that. I don't know.
I want to see Michael Burry tweeting about that. That's what I want to see.
You want to see? Yeah, I know. He's he's still silent. Is his account back? He deleted his account again.
I don't know.
But
haven't heard from him in a while.
Yeah, I know.
I want to hear his opinion on it.
Yeah, I tweeted at him a while ago. I said, "Come back."
Did you?
Yeah, I did. I said, "We need you."
He didn't listen.
He didn't listen. No.
Anyway, so long story short, Twitter has changed its name to X. Yeah. The crazy thing is that this was done so haphazardly. It's like, what did he tweet? He said, "Hey, if somebody sends me a good X logo, we'll change it tonight."
That has to be a troll. There's no way that has to be a troll. There's no way he just changed the logo after just tweeting, "Can someone send me a logo design?" But also, it wouldn't be completely off-brand for Musk to do something insane.
The next day it was done. Except this is the thing. Companies spend so much time and so much money on rebrands, and you can understand why, because if you go to Twitter, I'm on it right now, it's still like the logo is an X, but you're still tweeting, you're still searching Twitter, it's still Twitter. Like the only thing that's changed is the logo. Yeah,
it just seems out of place at the moment.
It does.
It's like it's kind of like when like a YouTube channel gets hacked and like it's changed to some Bitcoin thing, and it just like you just like, oh, this is out of place. Like it just doesn't look like it's an official change. It seems weird. I don't know.
It is weird. Yeah. Yeah. It seems very strange.
Musk,
I don't quite get it, but all right. Yeah. Good on you, Elon.
Musk said, he tweeted a lot of things, but this is one of them. He said, the Twitter name made sense when it was just 140 character messages going back and forth, like birds tweeting. But now you can post almost anything, including several hours of video. In the months to come, we will add comprehensive communications and the ability to conduct your entire financial world. The Twitter name does not make sense in that context. So we will bid goodbye to the bird. So there you go. What does that even mean? Your entire financial world?
Yeah, I don't know. I do not know.
Strange.
He must have. I'm sure he's got big plans brewing, but.
Yeah, I think
he probably said. I think honestly, this is probably a change because Elon has said, okay, we are still like he's been making all these changes to try and get away from the need for advertising revenue.
Yeah.
Doing the subscriptions, doing that. So I think this is him probably sitting down and brainstorming how do we change this app to be more self-sufficient in terms of the revenue that we generate, so that we're not. Because he's seen it already. He took charge and he said, free speech and blah, blah, blah. And then a lot of advertisers were like, you know what?
Bye.
F you, man. Bye. And then he was like, oh my gosh, there is actually a lot of advertiser control over Twitter. So I think his strategy now is like, okay, we've got to change this. We've got to do something with this to make it less reliant on ads. And he took a step in that direction with the blue check mark costing however much a month it is. But I think he's probably now just being like, okay, what else can we do? Finances. There's a lot of money in people's finances. Let's try and do that. I mean, he's already done it with PayPal once over, so he's probably being like, all right.
Yeah, and he's previously said how much he thinks WeChat that's used in China is such a good idea, which WeChat is basically the everything app for China.
Everything.
It's messaging, it's payments, it's video, it's everything.
It's everything.
So it seems like that's potentially what he means by your entire financial world. And I saw another tweet, I can't remember exactly when it was from, but he was talking about how potentially you could use the messaging kind of infrastructure that Twitter already has to send payments. He was kind of arguing that sending payments between people is pretty much the same. So it seems like he'll probably try and implement something like that relatively quickly, where you can do easy payment transactions between people as easily as sending a message to somebody. So yeah, I guess you'll
Crazy.
I guess you'll see how it goes.
Yeah, it'll be interesting to see what he does over the next year or two with Twitter, just to see where it, the Twitter of today, what does it look like in 2 years?
The Twitter of 18 months ago. I don't know when he made the acquisition, but the changes that have happened have been so rapid. Who knows what it looks like?
Yeah, it's interesting.
But it is interesting because this also comes after, of course, Meta, which we just spoke about, entered the micro blogging, is that what people call it? The micro blogging space with Threads to compete against Twitter, and so far Twitter is winning that battle. And there's some new data to suggest that it's pretty stark. So a new report from Sensor Tower, which is a data research firm kind of tracking user data and that sort of thing, they showed that the daily active users on Threads had dropped from 45 million, which was the kind of soon after launch, they hit 45 million daily active users, to just 13 million last week, which is a 70% drop since its peak. And at the same time, and that's kind of at the same time as Twitter's users have remained pretty steady at around 200 million daily active users. So there's pretty much been no dip in Twitter's usage, in Twitter's daily active users, whereas Threads has kind of seen this big start and then it's trailed off. And even more interestingly, to me at least, than just looking at the daily users, is how much time people are spending on these apps on average. So not only does kind of Twitter dominate on users, in terms of average time per day, it's Twitter is 30 minutes per day compared to Threads of just 4 minutes per day. So not only does Twitter have an enormous amount more daily active users, even after all of the hype that Threads had on launch, people are spending far more of their time also on Twitter, which speaks, I think, in big part to the massive brand and network effect that Twitter has. So there you go.
Yep. I thought this might happen.
Yeah, we disagreed on this. So yeah, it was interesting. I thought I was quite impressed by the amount of momentum that Threads was able to build very early. I don't think I've ever seen an app, launch that quickly with that much momentum. Yeah. So I was very curious to see, and I thought maybe they'd have a good shot at building on that momentum and just drawing a lot of users away from Twitter, but certainly hasn't happened so far. So,
I thought what I thought it reminded me of when they launched Threads, it reminded me of IGTV. You remember that?
Yeah, that was interesting.
They launched, and all the YouTubers made one IGTV.
I think I have exactly one video on there.
Me too. I have one. Yeah, because everyone was like, "Oh, this could be a rival to YouTube." Yeah. So everybody jumped on. Was like, "Hey, I'm on IGTV as well, so come and follow me." And then, sure enough, good luck competing with YouTube. Didn't work.
Yeah,
didn't work.
Very tough to overcome that network effect, because I think I kind of spoke about this in my video. It's kind of Threads really needed to just maintain an enormous amount of momentum because they were a smaller platform. So by the nature of network economic businesses, it was a worse platform because there's less activity on it.
Yeah.
So where are people going to spend their time? They're going to spend their time on the better platform, the bigger one. So to overcome that, you need a lot of momentum. And it ran out of steam, it seems like, at least so far.
Yeah.
So yeah, interesting.
Yeah. All right, Hamish, that is almost all the time we have for today. Let's fit in quickly one or two Q&A questions. We are right on the hour mark, so let's jump straight in. As a reminder, of course, if you wanted to ask a question for Q&A, just head over to the most recent version of the podcast on YouTube, drop us a comment, and we'll add it in. Or you can add a question to the Spotify subscription, the Spotify question box when you are listening on Spotify.
Yeah.
All right, Hamish. Where should we start?
Do this one. This is
sure, I'll ask you this one. Does the Warren Buffett investing strategy work with people that don't have thousands of dollars?
Yeah, I think that's a good question. I mean, the simple answer is yes. I think it does. I think Buffett's whole idea is that even if you're buying a small piece of a business, you're thinking of it as if you're buying the whole business. So, whether you're buying 5% of the business as Buffett might of a company, or even the whole business, or whether you're buying a couple of shares with what you have. I think the strategy in terms of evaluating the business, I think, remains pretty much the same. I mean, maybe there's some considerations if you have a very small amount of money in terms of the brokerage cost impacts and what's that going to look like. If you're only investing a couple of $1,000s or $1,000, then you probably want to be quite careful about your brokerage costs. But in terms of assessing and evaluating the business, nothing really changes. Whether you have $500, $50,000, or $1 million. The only thing that really changes is like the opportunities that are available to you. The more money you have, the less opportunities there really is.
Yeah, that's the important point I was going to raise, is that Warren Buffett can't really make that. If he had a couple $1,000s, he would be loving. He would be here, there, everywhere. He'd be doing so much stuff. But just because of his size, he can't really do that much. But yeah, actually, the Warren Buffett approach, I would argue, works better. The less money you have, there are more opportunities available out there to you. But
100%.
Yeah, no, I definitely think it. I think it works in all conditions.
Yeah.
But yeah, very good. All right. Do we want to do one more? I think maybe one more.
Yeah. Where should we go here? All right. Why is Mr. Munger so upset with his investment in Alibaba? Since they always speak against timing the market as opposed to staying in the market for a long time, I guess timing the market does count after all.
Yeah, I find that this is an interesting question. Charlie has definitely said that he got some parts of the Alibaba investment wrong. I think I would challenge the sentiment a little bit though, because I don't think he's upset with his investment in Alibaba, and the reason I say that is because he still holds it. I think if he was really genuinely upset with the management or how the company was run, he quite simply would have sold it and moved on. But he still holds quite a large chunk of Alibaba shares. What else was I going to say? Yeah, but he has been vocal about how he thought that he got his valuation wrong. That's what he's come out and said.
Yeah.
So he thinks the way I would summarize it is he definitely thinks the business is robust and a very important one in China, a very strong company. It is, as he's been saying in the media, it's still a goddamn online retailer, and it's going to cop the same kind of economics and market conditions and market effects, economic effects that are going on with, just general macroeconomic environment kind of stuff. But yeah, I think if he really had a problem with the business, he wouldn't still be holding it, because he's not that type of investor. If the fundamentals change, he would cut it and move on.
Yeah.
But I think if he had his time again, he would have really critically reevaluated what the valuation was, because he's admitted that he just bought it at way too high a price.
Yeah, I don't think he was upset that the stock fell after he bought it, which would be kind of an argument for timing the market or caring about the timing of the market. I think after it fell, he reevaluated it and then believed that he got the valuation wrong. So it wasn't that it fell or that the timing of his purchase was wrong. It was that he shouldn't have made the purchase at that price. I think at least that seems like what he said. So there's an important kind of distinction there.
Yeah, very cool. But yeah, overall, I don't believe timing the market is something that we should talk about at all.
No.
I think it's just not worth the time or energy.
Yeah.
I would argue that no one can do it.
Yep, 100%. All right. Well, with that said, thanks everyone for tuning in as always.
Thanks.
If you have any questions for future episodes, feel free to leave your questions either on Spotify. You can just kind of scroll up and ask your questions in Spotify, or head over to the YouTube version of the podcast and leave your questions as comments on the latest episode. Thanks to Seeking Alpha for sponsoring. seekingalpha.me/young investors to try Seeking Alpha free for 14 days. And thanks, Brandon, for joining me, as always.
All good, friend. That was good. Good fun.
Yep, that was good. And with that said, have a good rest of your weekend, everyone, and we'll see you guys next week. See you guys.
See you later.